Hi there, I'm Irk, and this is my channel Get Irked, where I teach how to invest for the long term. Today I'm going to try and teach you my technique for trading Bitcoin and other cryptocurrency safely. In light of the 30% plus sell-off that we saw in a matter of hours this week of May 17th to the 21st, 2021, I imagine that a lot of you have been thrown for a loop. Many of you may have Bitcoin and have lost value, and some of you may be looking at this sell-off and thinking, okay, how do I get in? I don't want to buy in at 35 and have the thing drop down to $3,000. How can I protect against that? One of my major focuses is all about risk management. That's my top priority. I want to make sure that I don't lose the capital I'm investing and that I know the risk that I'm taking on and limiting my risk. There's no point in risking everything, losing it all, and not being able to come back the next day and try again. If you're risking too much, you will eventually get blown out. The market always gets all of us. That's just the way it works. And it doesn't matter whether you're talking about stocks or you're talking about crypto. Something's going to happen that you didn't anticipate and you will get caught off guard. I've been watching a lot of YouTubers talking about the Bitcoin crash, many of whom are Bitcoin bulls like myself, but they're referring to how devastated they are. How, oh my God, I've lost so much money. I'm down so much. If you can be devastated, if you can't sleep at night because of an investment, that is your sign that you have too much on the line. You should never, ever risk money you cannot afford to lose entirely. We're talking about an incredibly speculative space. And although personally I don't think Bitcoin is ever going to go to zero, the way I protect my account against that is I have a fixed amount of US dollars that I'm trading, and that's it. If it goes to zero, that's the most I can lose. And I'm prepared for that. If I lose that account, that's fine. It's money I can afford to lose. For me, Bitcoin is less than 5% of my overall allocation. It really is something that I have controlled. That is risk management. That is risk control. You don't go out and sell every stock you have and take a loan out and buy $180,000 of some random coin in hopes that it will go up. There's an old adage in the stock market, hope is not an investing thesis. You want to plan everything in advance, and you want to be able to execute without any emotion. It is vital to not have emotion in investing, whether you're talking about cryptocurrency, whether you're talking about stocks. The second you get scared or the second you get excited, you will make a mistake. And actually, the worst emotion is one people don't think of as emotion, boredom. Oh my God, if you get bored, you will make a mistake because you'll force a trade that isn't there, you'll force something to happen that isn't there, and you'll be upside down before you even know it. Before we go any further, I have to say I'm not a financial advisor and I'm not a professional. Everything that you see in this video is informational and educational and entertainment purposes only. I am not telling you whether or not you should or should not buy a cryptocurrency or what you should invest in at all. I'm not a professional. I've just been doing this a very long time. I got into Bitcoin in December of 2017 after the peak and just proceeded to lose money for all of 2018, putting thousands and thousands of dollars mainly into Bitcoin, Ethereum, or Ether, Litecoin, and Bitcoin Cash, because back then Bitcoin Cash actually was a thing. Don't worry about that now. Over the course of 2018, I just went through smackdown after smackdown after smackdown because we were in a huge bear market. And one thing you have to learn about Bitcoin and cryptocurrency, they will do things you could not anticipate. They will do things no one can anticipate. This is one of the most volatile sectors in the entire investment community. So let's just take a quick look back at the past to understand what we might be able to expect in the future. So this is Bitcoin in its 2017 peak, and you can see this day right here, it peaked on Gemini at $19,999. Then in about a week later, it dropped to $10,611. So that is a drop from peak to trough of 46.94%. Keeping in mind this week, Bitcoin dropped 53% from its highs. And then Bitcoin bounced. And you can see it kind of looked like it was going to get some stability. Maybe it was going to head higher. And everybody kept saying 10,000 will hold, 10,000 will hold. Don't worry, it's going to be great. And then 10,000 didn't hold. So then we got 9,125. And everybody said, okay, yeah, look, you can see there was support in the back. This is going to hold. We're going to be okay. And then 9,000 didn't hold. And we went down to 59.31. So the last high was $11,878. It dropped a total of 50% from $11,878 to $5,931. And then it consolidated. And it did so for months. And it looked like the $6,000 mark was really rock solid support. And here we are just building up time so that we can make the next bull run and beat $20,000. Except that didn't happen. You could see as we move along that Bitcoin hit the support, broke through it, and that was the sign that we should have been taking seriously. I didn't. You can also see, if we zoom out a little bit, that every time Bitcoin bounces, it was like a ball or skipping a rock across a lake. It gets less and less momentum. And if you think about rock skipping, what happens at the end? It falls through the lake. And that's what happened. Here in November, we saw a break of 59.31, and it landed down at $5,200. And there it was. That was the break. And from there on, it was just an all-out dump. And it went all the way until December 15th at $3,126.88. Once again, these are the numbers on Gemini. They're a little bit different on each brokerage because there's some arbitrage or difference in pricing on Bitcoin between exchanges. This point in time was the absolute bottom. And let me tell you, it was horrible. People who were YouTube pundits and everybody was bulls, they all disappeared. There was nobody here. Everybody thought crypto was dead forever and ever. And let me tell you, if you're not feeling complete dread, even if you're a bull in the space, you will by the time you get to the low of a bear market. By this point, I'd lost so much money that when it broke the $6,000 mark, I got out. And I left $1,000 in the account so that I could play with it. And I was determined to try and figure out a way that I could trade or invest Bitcoin but capitalize on the volatility, that I could be careful around the volatility and instead having it to work to my advantage instead of having it absolutely destroy my account because I didn't anticipate how far we would drop. And we were down here in the $3,000 to $4,000 mark. We dropped in November and we didn't come back out until April. We were down there for 5 months. On the chart, it doesn't look that bad, but when you're living it, it just doesn't seem like you're ever going to get out of it. And if you're underwater in a big way, or if you've lost a lot of money, chances are you're just going to leave the space. Why am I telling you all of this? So now we're on today. The high on Gemini is $64,900. The low is $28,700. I've been watching a lot of YouTubers, and many of them think that this is the $3,000 mark from the 2018 crash. I think this is the $10,000 mark from the 2018 crash. In other words, I think we've got quite a bit of a ways to go. A lot of more reasonable pundits I'm hearing say that 20,000 is probably going to be where we're going to find support. And you can see you can find support by looking in the past and kind of seeing where there's the most action. The longer an asset spends consolidating, the more of a base and a support it builds up. So I do believe that we're going to come down to the low to mid 20s. I think that's a sure target. And I hope I'm wrong. I am a bull for the long term, and I do hodl all of the Bitcoin that I collect. I'm going to talk about my technique later, but basically I call it trading to invest. I build my Bitcoin accumulation by trading. The difference is when I'm selling, I don't take all of my USD back. I only take what I put in, and I keep the remainder, the profits, in whatever coin I'm trading. And right now, those coins are only Bitcoin and Ether. So the reason I think this is just the first level of support is if you remember back in 2018, when it first dropped to 10,600, it did this called shot. In one day, it dipped real hard, real fast, and set support. That felt exactly like this. Except if you remember, it did the same thing later. When 10,000 didn't hold, it went down to 5,900 in the exact same fashion, this called shot. It's kind of showing you, hey, this is going to be the new level of support, except it might not hold. If you remember again in 2018, when it finally did bottom at 3,100, it wasn't a called shot. In fact, it was difficult to know whether or not it was at the bottom. That's what made it so much worse. Since we had been constantly shocked throughout the entire year of 2018, a lot of bulls really honestly didn't know how much lower it could go. Could we see 2,000? Could we see 1,000? What about triple digits? So let me talk a little bit about my technique, trading to invest. So what I want to show you is how to capitalize on volatility and how not to have a direct opinion on what's going on. The way that I trade is I'm not a bear or a bull, and it's the way I invest in stocks too. I just have a plan for both directions. Let's say for the sake of argument, you've decided that the amount you want to risk is $1,000. You're totally okay losing $1,000. How do you put it to work? I would suggest looking at the chart and making levels that you would want to get started buying in. So if we go all the way back, you can see that there are different levels of support in different points. And you can see you can make support as low as you'd like it to go. What I'm using here, this was the crash in 2020. So this is the thing to remember about this space. We went from over 10,000 to back to 3,900. So everybody thought when we'd gotten out of the cold winter in 2018 that we were on the next bull run. But unexpected black swan events like the pandemic can make it so that you'll just lose the value again. So if you go all in thinking that 35,000 is going to hold or whatever, it isn't necessarily going to work that way. I'm not looking at making $1 million right away. I'm looking at building a house, brick by brick over time. I just want to do one good trade followed by another good trade. I'm just trying to accumulate Bitcoin. I believe in the long-term thesis of Bitcoin. I don't know if the $1 million price target's right, but I hope it is. But I want to accumulate as much as I can, and I want to do it where I'm risking as little money as I can. If I just YOLO'd the entire amount of money I have in my account in at one time, and it didn't go up and it just got cut in half, I'd be kicking myself because I'd want to buy more when we were cut in half. But now I'm putting more money to risk, and what if it goes to zero? I don't think the likelihood of Bitcoin going to zero is real. You can look at my Bitcoin versus gold video for more information on the risks that are facing both Bitcoin and gold and what I think the likelihood is. But you have to go into the space believing that Bitcoin won't go to zero. If you think there's a possibility Bitcoin's going to zero, this is absolutely not the space for you. Additionally, the way you protect against that is really risk management. You are only going to risk the money you can afford to lose entirely, not money you can afford to lose. You need to be prepared for this money to just disappear and be gone forever. Going back to your $1,000, you're going to want to make your first buy somewhere around this level, I would imagine. I do think that Bitcoin will retest $30,000. I think it's going to go lower, but I think it'll retest 30,000. So if you want it to be simple, I use a lot of technical analysis. You don't need to use that. You can just cost average in, which means you're just buying in stages at different levels. So if you had $1,000, you could make 20 purchases at $50 each. If you wanted to be more aggressive, you could just make your first purchase right away and then add to it on the way down. So if you had 20 purchases you could make, there are only 12 levels that I've listed here. So you're protected all the way down to March 2020, and you even have dry powder in case it breaks, in case we see this break. Do I think that's possible? No, I really don't think it's possible, but I don't know. I want the market to show me how low we can go. So as you're buying in stages on the way down, you're lowering your per coin cost, which means when Bitcoin bounces, you can wait until you have a profit. Then you can use stop limit orders and get out with the profit, but only take out the money you put in. So if we only go down to 17,000, say, then you've only got $50, $100, $150, $200, $250 in work. You're still 75% cash. And if we bounced off 17,000 and went up to maybe 40,000, you're up more than a double. Sell half of it, keep the other half in Bitcoin, and start over again. Just keep trading. But you always want to protect your capital. That's the top priority. We're not here to call a shot. We're not Babe Ruth pointing out and saying, I'm going to hit the home run that way. We're here to hit singles and doubles over and over again. Just put guys on bases. I started using this technique in 2018, and I have had 66 trades successful and no unsuccessful trades. Sometimes a trade lasts a couple of days, sometimes it lasts a couple of weeks, and sometimes it can go a month or two. I let the market tell me how my trade's going to work, but I really stick to my discipline. So I plan the entire trade out in advance, and if we don't get as low as my trade says, then so be it. I'll bounce up, I'll get profit, I'll sell out when I'm comfortable, and I'll go from there. I mentioned a few different terms in this video that I want to go over really quick. First off, there are two kinds of orders that I would use on an exchange like Gemini, which is the one I recommend. The two exchanges that I support are Coinbase and Gemini because both of them have insurance against your US dollars. None of the exchanges have insurance against you getting hacked and losing your cryptocurrency, but then again, the same is true of stock exchanges. Only your US currency is protected. Your stocks are not. At any rate, I only use Coinbase and Gemini, even though there are free ones out there. I don't use Robinhood and I don't use PayPal or Square because although they have free trading for crypto, they don't allow you to take the crypto off the network. If you use Gemini, they have absolutely no fee to take crypto off of their network right now and put it on your own hard wallet or your cold wallet. You should always use limit orders. Limit orders means you're going to buy this amount at this price or better. Now, in the crypto exchanges, because it's a 24-hour exchange, if you use a limit order, you're going to get it at the price that you say, or you're not going to get it at all. If you use a market order, the problem with that is if you see it sell off like we did this Wednesday, where it sold off 20% in 30 minutes, you put it in a market order and you have no idea where you're going to get it. You could get it close to the bottom, or the exchange could put you at the back of the line and you could miss the whole 20% sell off and be buying right at the level that it was when it started. If you use a limit order, you could probably get filled a couple times on the way down, but you would get at that price. In addition, both Gemini and Coinbase have lower trading fees if you use limit orders because your order stays on the book and that makes you a market maker, someone who's adding liquidity. If you just use market orders, you're what's called a market taker, and you have much higher fees for that. In some cases, double what it is for a market maker. The other type of order I mentioned was a stop loss limit order. What you can do, let's say if you're looking closer at this trade, if you wanted to make sure if it broke this level that it would sell off, that's $34,989. Let's say you didn't want to take a loss or you had a profit and you wanted to lock it in. You could make your stop $34,984 and then you could set a limit beneath that. What that means is if the price action dropped below your stop, it would execute your limit order. The most important thing to remember is that the limit has to be quite a bit below your stop. Otherwise, it's very possible, Bitcoin moves very fast, that it could move through your stop and through your limit, which means your order wouldn't go through and you'd still be in the trade. So if you use stop loss limit orders, make sure you leave enough of a gap beneath your stop so that you'll get filled. You can also use stop loss market orders. However, again, I don't recommend this. What happens there is when Bitcoin drops through your stop, your order to sell goes into the market and it fills whenever it can. You could get a much worse price than you ever anticipated.